Good evening everyone, welcome back to Option Size channel. Today we'll be doing our expiry trade analysis. Today is a special day because we have booked the highest ever profit during intraday, which is around 36,000 rupees, which is approximately around 1.75% of the capital deployed. Today was fairly easy day to trade for the expiry. The movements were not sudden, and as an option seller you have to be cautious and careful only about violent moves. So whenever there is slow movements in the market, you get enough time to get out of your positions and adjust the positions. So today up till 2:30 p.m. The movement was so slow, and it was kind of okay trade to manage. So we'll just get into the details. Before that, I'll just show my Zerodha profit statement for the day. So we have booked around 36,000, which, as I mentioned, is 1.75% of the capital deployed. Now coming back to our trades, so the market opened somewhere here, gap up here at around 41,460 levels with the gap up, and after the gap up there was a huge sell-off. In the first 5-minute candle itself there was a huge sell-off, and a wick was formed in the first 5-minute candle. So we ended with straddles at this point, and as you can see, further to that market went up and came down. So it had a period of consolidation here also. After that market went down and came up. So in this period of consolidation we had booked around 3,000 rupees profit in the straddle. Once around 3,000 rupees was booked, I left the straddle and then started taking positions downwards, since there was a downwards bias in the market, and there was huge call writing which was happening in 41,500 call levels. So after that market was moving very slowly on the downward side. So I had taken conservative positions for 41,600 and 41,500 calls, and I had marked the rectangular channel which you can see. So my idea was to go short aggressively on the call side when the channel is broken, and when the channel was broken here, finally I went aggressively on the downside with 41,400 calls. But as you can see, market had a sudden pullback after that, and this pullback I had adjusted with 41,100 puts as well. So my premiums were balanced in 41,100 puts and 400 calls, so it was fairly easy for me to manage. And thereafter I had gone back to 41,500 call levels and 41,000 put levels, which was fairly easy to manage, and the market obviously expired in between, so I had collected all the premiums there, much of the theta decay. And one thing to note was that although Bank Nifty doesn't look like there was an aggressive U-turn, it was not the case with Nifty. As you can see, Nifty initially market came down, and at around 3 p.m. a huge up rally had happened. So this is the kind of market which throws you out from your profits. So it is very important that you try to book most of your profits by around 2:30 and get out of the market before any violent move happens. I also did the same. I had booked my profits by around 2:30 and I had gotten out of the system, because otherwise I also would have panicked by seeing the Nifty charts here. Although Bank Nifty didn't move much as expected, Nifty chart would have panicked every one of us. Those who trade Nifty would have had a difficult day today, since that up move was very difficult to manage. So for us, luckily it turned out to be a good day, and I had booked the highest ever profit so far in the intraday, which is around 36,000 rupees. So the learning goes on, guys. Like every day we trade, it's a new day for learning. So today few of my friends were also trading with me, and they tried a few option buying which didn't go well as planned. So sometimes option buying can give you very good returns if the direction is correct, and other times it's especially during expiry days, it's a bit difficult to hold on to buying side positions. And one great takeaway from today's trade was that you should book your profit, try to book your profit as early as possible and get out of the market. You should not wait for the expiry to complete after 2:30, because the risk to reward when you go beyond 2:30 is very minimal, guys, because if a sudden movement happens, you don't have the premium in other side to manage the positions. So after 230, 245 and all, the options, suppose if you have taken a balanced position of call and put, let's say both are at 5 rupees, the option which is at 5 rupees can even spike to 15 and 20 rupees, and the other side option which is at 5 rupees may come down only to 3 or 2 rupees. So there is very limited premium to manage beyond 230. So it's always advisable to get out of the trades in expiry days after 230. Book maximum of your profits by then and get out of the trade. So this is one learning which I've had before, and had days where I held on to positions after 230 and it had affected my MTMs. So this today, especially after seeing the Nifty chart, it strengthened more that you should always try to book your profits early by 230 and get out of the system during expiry days, because all the other days you can manage. Expiry days, due to ultra low premiums on the opposite side, you will not be able to manage your positions. That is only if you are a non-directional seller like me. If you are a directional buyer or a directional seller, then absolutely at any time, at any point you can trade. It's all about your trading style. So this is the style which I choose, and this suits me. So that is that. And yeah, looking forward to more good expiries like this, and I'll keep you all posted. Thank you and have a nice day.